Good morning. It's Saturday morning, October 21st, 2023. I'm going to do a short market report. I recorded a video yesterday during the market hours about intraday money flow, and that was going to serve as my weekend report, but I thought I would do a short report in addition to that using the HGS market charts for analysis. I'll show you how I do that. Okay, standard risk disclaimer. Any stock, index, or ETF mentioned in this presentation is not a recommendation to buy or sell. All trading strategies are used at your own risk. Before I go to the charts that I look at used to analyze the indexes, I want to point out a few things here. This is my NASDAQ analysis that I'm going to be sending out via email and on Twitter and so on. Anyway, looking at this, you can see that there are a lot of markings on here, and I'm going to start here at the top. Accumulation distribution is C, but if you look up here, you can see the volume was less than average, spread was above average, and the close was down. Down 1.5% yesterday, down 3.5% since Monday morning, down 3.2% since last Friday. So it was a rough week. Now, I'm pointing out that there are three black crows here, which suggest extreme weakness, but if you look over here, you'll see there were three black crows here, and it often pretends a reversal. I better change that to a red. So there was a gap down on this, and then we had a rally, and it looks like well, these are not really three black crows. I'd like to see more separation like this, but this is oversold. We're at support. Critical support is at 12,950, which is right here. I said Friday was the third day of strong selling, and once again, volume was less than average. The low volume suggests it is more of a buyer's strike because there is not panic selling like we would see in a selling climax. Internals were weak, but not excessively so, at 2.47 to 1, and I get that information from right here. New lows shot up to 222. You can see that right here. My perfect speculator list is down to 12 on October 12th. The number was 205, so that shows how weak the market is right now. The perfect speculator list looks for, well, it contains stocks that are within 5% of their 52-week high, and every day when I scan, it shows me the stocks that are either breaking out to a 52-week high or a new 3.25-year high. Obviously, we're oversold. It's very weak. It's a dangerous market to be taking long trades, but there are trades that are positive. The marine shipping group has been strong for quite some time now. It was showing up in my money flow scans. It has been for a long time. Okay, I'm going to minimize this, and then I'm going to, I need to do this. Take a look at something here. Now, one of my customers had a discrepancy in the money flow in and out, and I think he has an older installation. What I did is I modified this money flow in and out right here, the filters, and there is another money flow in and out if you have the former installation, which is not dated. So make sure you're using the one with the date. Now, to get rid of that other one, all you have to do, if you're using that other one, just click on User Smart Groups, click up here on this icon, go down and locate the group. And I don't have it in this version. Just go ahead and highlight it and delete it. And make sure you're using this for your money flow. Now I'm going to bring my Snagit editor back up, and let me zoom in on these. Okay, you can see money flow in. You should have total securities 126 today in that dated version of money flowing in. And you can see that precious metal and mining, lead with biotech, specialty pharma, marine shipping has appeared again today. So this is where the money was flowing in, 126 securities. Now on the money flowing out, renewable energy has just been getting whacked recently. Look at that. 8.24% of the 182 stocks were renewable energy equipment. Here's some biotech banks, application software, semiconductor devices, and so on. Investment management has been weak. Schwab reported the other day they bounced a little bit on earnings or came back from a low, and they just have been going down with the other investment management stocks. So this is the way the market looks up to this point. And remember, use the money flow in and out. And what I'm using is this group. And you can see there are 126 securities in here. On the outside, use this one. So, and there's 182. Now, what I want to do is I want to move on and talk about using the HGSI groups for market analysis. They're under my market analysis user groups, under their broad market indices, and I'm using the S&P 1500 because it's the broadest index. Now you'll find these charts in folder number 2, HGSI index charts. I'm going to click on the first one. I'll make it full screen here. And what we have here is A&E accumulation distribution crossover. You can see the E's were going down, but now they're going up. And if you look down at the next window, this is A and B combined on accumulation. Distribution is D and E. I'm sorry, this is D and E. This is A and B. A and B is turned down. D and E is turned up. And as I go down to the next chart, this is number 2. If this is just kind of a nice visual, you can see the money flow in and out, or the accumulation distribution, not money flow, right here. This is D. This is E. See how the E's shooting up and the D's are going down too. The C's are going down. A's are going down and B's are going down. So you can just look at this and see the money flow. In a strong market, you're going to see this. In a weak market, you're going to see this. And that's obviously a very weak market. Okay, moving on down, I'm going to go to number 3. This is accumulation distribution. And you can see that the Chaikin 21-day money flow never did turn positive after going negative up at this point. Right here. These are all percent AD velocity red, and you can... these are red, and they're the AD velocity. There's nothing, no green bars in here at all. Compare that to over here when the market was going up. Everything was green over here. Now this is accumulation distribution up here. It's D distribution on the S&P 1500. Going to move on down to the next one. This is just a close look at advancing issues versus declining issues. I don't have the unchanged in here, but you can see that the AD line was moving up with the market right here, and then it rolled over. And volume did pick up here the last 3 days on this. Now this is a chart I look at quite a bit. It shows the percent of stocks above their 20-day moving average within the S&P 1500 index above the 30-day moving average. You can see the numbers over here above the 50-day moving average and above the 200. Now when this goes below its moving average on the 200, that's normally not a good sign, and you can see that's where it worked out. Now in a strong market, you're going to see the line up here towards the top. It was rallying, but it's rolled over and just doesn't look good. Now you can do this with any index. I'm just using the S&P 1500 right now, but if I wanted to use let's see, how about the NASDAQ 100? We'll analyze the NASDAQ 100, and if you want the exact numbers, just click on this, and it'll tell you the percent numbers. I need to get on the right tool here. Here's 30, 20, 30, 50, and above the 200. And then if you click anywhere on here and go back, it'll give you the numbers for those dates. So looks awfully weak here too. I'm going to go back to the S&P 1500. Buy, sell. This is a chart I put together probably 15 years ago, and it works pretty well when there are 5-to-1 advancers or decliners. You're going to get a bright red or bright green depending on if it's up or down, and when all these line up, then you're going to get a sell signal. There would have been a sell signal on this day right here, but the VPOC hadn't turned negative yet, so it was blank, but the light red means that it's at least a 3-to-1 downside on the advancing issues versus declining issues and the volume. So sell signal here. There was a weak buy here, a strong buy here the other day when we were up in this area. I'll put the crosshair on so you can see this. And then obviously it didn't hold and the market rolled over. Now this is with the chart with my fan, the 200, the 100, the 50, and the 18. And in this chart's the same thing except without the fan, just to clean it up. You're going to get the same signals though. Okay, now this is once again the S&P 1500, the internals, the AD line. You can see what's happening. And then this is just a close-up view of the percent above the 50-day moving average, the percentage of the stocks within the index above the 50-day moving average. It's been weak for some time. Here's our little rally here, but it's rolled over. This is the VPA. These colors represent the VPA trends, which correspond with this line here. And if you click anywhere in here, it will tell you what the trends, what these colors represent. Like here, dark green, everything's going up. We're on blue right now, which means it's a mixed market. Best fit long is down, medium's up, and short is down. See, it was green here. Short term was turning up right here, and then it went to a darker green. This green right here, all three of them were up. So here we're going down. The VPA flag is an effort to fall, which is right here. Okay, moving on down the list. Here is a readout of a lot of information pertaining to whatever index you're looking at. You can see accumulation, new 52-week highs and lows, advancing versus declining, and so on. A lot of information if you really want to look inside of an index. And here's the AD line going down. I haven't pointed out here, but this is these are my volume indicators based upon pocket, well, it's what I call them here. It's the pocket pivot volume. Now, I don't use it the same way as Gil Morales and Chris Casher did originally. I'm just looking for excessive volume compared to the past 5 or 10 days, and you can see these volume bars are against higher than any up days in the recent 5 or 10 days. And I'll one couple more, and then I'll finish. Force index 13, force index 2, these turn negative, obviously. Looking down here, you can see the distribution. 3 versus the 6, it was up here and then it rolled over. The 6 never did get above the 18, and of course the 18 didn't get above the 50. In a strong market, you'll see all the histograms to the positive side. 2 more. This is a McClellan oscillator. It is not down in the oversold area yet. That would be down in these areas, but it turned down again. Maybe there's more room to go. This is the index-based arms. It's hard to read because it doesn't really scale out like I would like it to, but it shows you the advancing versus declining issues right here. So use this box. It really gives you a read. Now, this is a chart I put in well, it's been a while now. Just accumulation distribution showing you velocity and acceleration, deceleration on accumulation. And here's the VPOC down here. And you know what these colors are now. Anyway, that's how I use these charts. And I usually use them on the broad market index. By the way, the indexes have had some minor changes. I sent them out to get updated, and they should be updated here in a day or two. So the numbers are just going to be slightly different, but that doesn't make any matter. It's the indexes work fine now for our purposes. We can see exactly what's going on, and it doesn't look pretty. Well, thanks for listening. This is my short market report, and like I said, I did another one yesterday. They'll both be sent out to Insider Club members, and I'll probably post them for everybody to watch. Thanks for listening.